Hi. So now we are on Chapter 8, and this is a short lecture involving working with balance sheet accounts and budgets, and we'll be going through some of the develop your skill activities. This chapter has a lot of miscellaneous issues in it. Managing other current assets, preparing journal entries, creating recurring journal entries, setting up fixed asset purchases, etc. So there's going to be a lot of short miscellaneous topics in it. And I'm going to point out just the highlights. Last time I went a little bit too long and I apologize for that. So in this project, in the Develop Your Skills section, we're working with the test drive, Craig's Design and Landscaping Services, as we always do. And Craig is going to be paying for insurance 6 months in advance, which is a prepaid, as you remember, so he could get a better rate. He's also going to be purchasing 2 new trucks, taking out a 3-year loan on each one, and then he wants to budget as well. So first of all, let's talk about current assets. If you remember from financial accounting, current assets are assets that are used up or turned into cash within 1 year. In QuickBooks Online, other current assets include prepaid expenses like insurance and rent, and security deposits. You may recall from financial accounting that when a business pays for something before they receive the benefit of the cost, they put it into an asset account called a prepaid because it represents a future benefit. At the end of the accounting period, after you have received the benefit of the cost, you have to make an adjusting entry, taking the value received out of the prepaid account and transferring it into an expense account, a received benefit. If you recall, that's from Chapter 4 in Financial Accounting, the deferral adjusting entries. They give us a nice example here, which I'll let you take a look at on your own in a little more depth, but they show the purchase of prepaid insurance on January 1st and reduction of the checking account. Then at January 31st, they take 1/6 of that because that represents 6 months. They take 1/6 out by crediting the prepaid insurance account and debiting insurance expense. Remember, an asset represents a future benefit, an expense a used up benefit, and we just used up 1 month. And we do that for 6 months. At the end of each month, we do the same journal entry, crediting prepaid insurance and debiting insurance expense. So we would have to create the account first. And we're going to choose other current assets as the account type, prepaid expense as the detail type, and then the name would be prepaid insurance. But I know you can follow along with that. And I know you know how to create checks. Now let's talk about how to prepare a journal entry, and in particular recurring journal entries. Now, as we've talked about quite frequently in class, QuickBooks Online is a form-based accounting program, meaning it uses forms like checks and invoices and bills and deposits to create a balanced transaction, and then QuickBooks automatically records it behind the scenes. They create automatic journal entries based on how you fill out the form. But QuickBooks Online does not have a form for adjustments or adjusting entries. So we have to use a journal entry form. The way we do that is we choose New, Other than Journal Entry. But the neat thing about QuickBooks is if you're going to have that same journal entry that needs to be made each month for 6 months, as we did with the insurance, you can create a recurring journal entry. Now, recurring journal entries and in general recurring transactions could be scheduled, and these happen automatically on schedule, and we use those for transactions and amounts that do not vary. The same accounts are debited and credited each month, and the amount remains the same. Kind of like in our situation that we just looked at with the insurance. However, if you have an amount that varies, then you would set it to remind you that the entry needs to be made, and you would have it set up and but not automatically occur because you have to put the amount in at regular intervals. The unscheduled type of recurring transaction is simply a template, and you complete the data when it's necessary. Okay. So again, to create a journal entry, you choose New, Other, then Journal Entry. And if you want to make it a recurring journal entry, you simply look at the tray at the bottom of the window and choose Make Recurring. And if you'd like to take a look at your recurring transactions, you go to the gear, choose Lists, and then Recurring Transactions. Okay, now we have a term that is not often used now called fixed assets. Now we call them long-lived tangible assets. These are usually fixed assets are usually a company's tangible assets with a useful life of more than 1 year, and we use them in production of goods and services. Examples are buildings, office equipment, vehicles, and machinery. Long-term liabilities are liabilities that will be paid more than 1 year into the future, and you often use long-term liabilities to finance the purchase of fixed assets. Now in this section of the Develop Your Skills, you're going to have to create 2 accounts. So you would go to Gear and then Your Company, Chart of Accounts, and New. First you create an account whose name is 2022 Ford Super Duty, and this is the description. Then you create a second account that involves the loan. They give you the account type, detail, and the name of the account would be Ford's Truck Loan. Okay, so there's the asset, there's the liability. And then of course you record the purchase. Nothing fancy about that. You've filled out lots of check forms in prior chapters. Okay, transferring funds between accounts. You've actually already done this. We did this back in Chapter 5 on page 98 in the Develop Your Skills and page 111 in the Apply Your Skills. And that means moving monies between accounts, maybe a checking to a savings, which is what we did back on page 111, or from a checking account to pay a loan, to make a loan installment. And because you're familiar with that, I'm just going to remind you of what to do. You click on the New button and then Other and Transfer and fill it out. And you can also make that recurring so that loan payment automatically happens on a monthly basis. Okay, petty cash. Now if you remember from financial accounting, petty cash is the name we give to an account that holds small amounts of cash available to pay for small and last-minute expenses for which you don't have time to go through a formal voucher system purchase. Think of reimbursing an employee for an emergency purchase of a USB flash drive or for cab fare. Petty cash is funded by withdrawing cash from a bank account, establishing a petty cash account, and then replenishing it when needed. However, the QuickBooks Online petty cash system is a bit different than you learned in financial accounting. The credits go directly against the petty cash account as money is dispersed. In other words, instead of waiting to record the expense in a journal entry when you replenish the account, each time money is paid out, the petty cash account is credited. Replenishing transfers money from the checking to the petty cash account. So in order to do this, we have to do a few steps. First, we create a check, New, Vendors, and then Check. We type Cashier as the payee, and we're paying that directly into the petty cash account. When we reimburse an employee, in this example, an employee is paid something out of his own pocket, and you give him the money from petty cash and place the receipt in the box. So we go to New, Vendors, Expense, because you're paying money out directly. We type petty cash in the payment account field. And permits in this case is the expense account. Remember, when you see the word category, it really means account. Okay, another miscellaneous topic is handling uncollectible receivables, bad debts basically. And if you remember again from financial accounting, an uncollectible account receivable refers to a sale or service made on account that you do not expect to collect. Why might that happen? Bankruptcy, inability to locate a customer, a dispute with a customer. Those are various reasons. So you should not void or delete an invoice for a bad debt because you need to maintain a record of the sale in the proper accounting period. So what we're going to do is create a product or service and then an expense account in your chart of accounts and record a credit memo. So here's the 2 steps here. We set up an account called bad debts. Okay, that's the name of the account and it's the detail type and it's an expense account. We also create a product and service called bad debt and the description is write-off uncollectible. We're not going to put an amount on because that depends on a specific customer's debt. Now in the income account you actually put the bad debt expense account here. I wanted to star that to remind you of that. And then after you have both the account and the product or service created, we then create the credit memo. We choose New Customers Credit Memo, choose the customer, and simply fill out the form, and QuickBooks automatically applies the credit memo to the open invoice. This last area I'm going to let you take a look at on your own because it's not a very complicated area and it involves budgets. If you are in the process of taking Accounting 117, Managerial Accounting, or if you have already taken it, you've become familiar with budgets already. Many businesses want to budget for the coming months or year in order to predict future expenses and income, future expenses and income, and measure performance against the prediction. QuickBooks Online allows you to create a budget by account and month, and if needed, by customer for all your profit and loss accounts. And you'll be going to the Tools menu and then choosing Budgeting. And our text leads you through that process. Okay, so we're going to end the mini lecture here. I'd like you to go through those steps on your own using Craig's Landscaping. And then I'm going to prepare a second mini lecture involving the reinforce your skills and apply your skills areas, and I'll be giving you some hints on those. Take care.